Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so grateful, thankful for life, and happy to be with you here this morning as we're going to be taking a fresh new perspective at the financial market. But before we kickstart the session, I would like to confirm that we are truly on the same page. That is, you can see my screen and you can hear my voice very, very clearly. So if you can do this, please type in hi in the comment section so that we can get this party started. So I would like to see some feedback, please, as regards to um, the quality of the presentation. Can you see my screen? Can you hear my voice clearly without distortion? Please feel free to let me know in the comment section. So I'll be taking some 10 seconds off to see um, your comments. Okay, so let's see what we have here. Um, okay, I can see 1784. Good morning. 4017. 478. 8603. Good morning to you. Thank you very much. Nikki74, thank you. Thank you for checking in. Dandy7819, thank you very much. Hey, Carrie, how are you doing today? Glad to have you around. Good morning to you. Winnie Wonnie, that was an interesting name, that is. Good morning to you too as well. Okay, so I'll take this as a positive confirmation that we are good to go this morning. So on this note, I welcome you all to yet another promising edition of the X Trend Speed Live. My whole name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host. We shall be delving into the financial market. And in fact, in anticipation of today's trading session, I've already done and conducted a comprehensive price action based technical analysis using simple parameters such as trend lines, key levels, and of course chart patterns to uncover valuable insights into the historical price movement of all the financial assets on our watch list. Now, for this week, we have been monitoring four big assets. These are the US All Spot, the USTech100, popularly known as the NASDAQ, and of course, we had the GBPUSD, and my favorite, the XAUUSD, popularly known as the Gold Spot. And on all these assets, we have been monitoring them and doing quite well, in fact, in that regard. So we are going to be looking at the current market structure from this simple perspective to strategically position ourselves ahead of the trading session today. And for those who are joining us for the first time, I'm very sure you must be asking what is happening here, what is really going on in this space. Well, basically what we do here is to come together as a community in anticipation of the New York session every day. And while we are in the session, we normally review how well our existing position is, while we also strategically position ourselves in such a way that we can catch any potential trading opportunity during the New York trading session. And this, of course, happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time, as we come here to do what we do best. So once again, you are very, very much welcome on board, and I advise you to stay tuned in through to the end of the session, and of course our subsequent editions too, as well, as the more time you spend with us, the better you become in understanding how to use the information here to eventually take a informed trading decision on your own account independently. So on this note, I welcome you once again, and let's dive right into the business for today. So, as usual, the first thing we will do is to check on the economic calendar. As you all know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, hereby using this information as well to position ourselves for potential trading opportunity ahead, during, and even after the event. So right here on the economic calendar, you know how we do it. We normally focus on high impact event from all the economies that affects the assets we are looking at, and these are the United States, the Japanese, and of course the United Kingdom's economy. Now for today, Wednesday, August 9th, we do not have any high impact event. Likewise, we don't have any medium impact event too as well. So what we are simply going to be doing today is to basically rely on our technical skills to manage our current position and at the same time identify potential trading opportunity ahead of the New York trading session. So with that being said, let's dive right into the chart and look at things from a technical standpoint. So as usual, the first financial asset on our watch list for today is of course the US oil spot. Now on the US oil spot, we've had quite an interesting position since the beginning of the week. Today is the day 3 of the new week, and in fact we've had significant amount of profit as we took advantage of both selling and of course buying opportunities during the trading session since the beginning of the week. So let's run through how the week started for us here in this community. So at the beginning of the week, we initially saw how price action had been ranging between the $82.85 level and the $82.20 area to give us an insight into the level of indecision in the market at the beginning of the week. And in fact, this also helped us to have a structure to work with as well. You know, whenever we have a flat range like this, we normally remain patient waiting for a signal to come, either in the form of a breakout of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, in addition to that structure, we begin to see some signs that sellers might likely take over the market. And one of the signs we saw was how it became difficult for buyers to break out of that resistance line at the $82.85 level. It first happened on Friday of last week's trading session, and we also saw the same thing happen during the early hours of this new week, giving us signs that we might likely be seeing price action transition into a reversal pattern in the form of a double top structure. And we went step further to visualize what the reversal pattern will look like. So we saw the first rejection, we saw price action come into the $82.20 level, we saw price come back again to retest that resistance level to bring price back into this area, hereby giving us something that looks like a double top structure. And you know how we do it in this community. When price action gradually transition into what is looking like a reversal pattern, the next thing we want to be doing is to identify the neckline, which we will be using to validate that reversal pattern, as we need a breakdown retest of that structure to join that reversal move to the downside. And of course, I told you how I took advantage of a selling opportunity as soon as price broke down the $82.20 level. And I can remember vividly when I was mentioning here that for those who had missed out on this opportunity, that we want to remain patient waiting for new structures to join the downtrend continuation. And one of the patterns we projected on this market structure was a potential retracement back to retest the neckline that was broken to incite that downtrend scenario. And of course, this was exactly what happened, as we saw price action come back to retest the structure a couple of times. We saw the first one around here, we saw the second one. So if you had missed out on the first one, the market gave us the second opportunity, and in fact we had three, and we had the fourth one to join that bearish move to the downside. And for those who took advantage of that opportunity, for that first position, we saw price move over 250 pips in our favor. And remember, we also added one more position at the breakdown of the $82.52 level, which also moved over 180 pips. So for the first 2 days, for the first day of this week, we were able to scoop close to over 400 pips on two positions on the US All Spot. Now, during our live session yesterday, I was emphasizing that we could likely have a retracement move or a sell-off, and this will be dependent on how far that bearish move will go. And one of the patterns I shared with you here yesterday was the $80 level. I told you how important the $80 level is, and I told you yesterday that we are going to be looking out for how price action reacts to that level to determine what our next course of action will be. And one of the things I said here is that we are only going to be selling, adding more sell position to our existing trade if we do have a breakdown and retest of that structure, and that if we see buy pressure resume above or around the $80 mark, we shall be joining the uptrend continuation. And in addition to that is the fact that we had a breakout of that key level at the $80 mark right here on Thursday, and we all agreed that from a technical standpoint, there are chances that price action could come back, retest that structure in anticipation of an uptrend continuation. So this gave us another buy position yesterday, as we were able to scoop over. At this point in time, if you are taking advantage of that position, you will be having roughly 300 pips in profit at this particular point in time. And for those who took advantage of that opportunity as well, well done to you for being on standby to have capitalized on that move. So for the first half of the week, we are tremendously profitable, running with over 600 to 700 pips in profit already. In fact, at this point in time, you can afford not to take any positions again on the US All Spot. But that doesn't mean that if we see opportunities, we of course do want to take advantage of it. So well done again. Congrats once again to everyone who has been part of this profitable journey. And for those who still have a buy position running at this particular point in time, you know how we do it. The next thing we want to be doing is to move all stop losses on all positions to secure our current position. And from the look of things right now, I'm of the opinion that anywhere around the $82.30 and our key level had the $82 area seems most appropriate to move all stop losses to, as we of course need to give enough room for price action to breach, just in case it comes back to retest that area in anticipation of an uptrend continuation. Now, with a well secured position at this moment, what is going to be our plans for today? How do we intend to manage our current position? And for those who had missed out on this opportunity, how do we intend to join a potential uptrend? And if possible, price is going to the downside, what are we going to be looking at on this market structure to give us a signal to go bearish? So with that being said here, let's look at what is really going on here. So this morning, while I was trying to decipher where participant in the market will be, the sentiment in the market will be taking us to, I noticed here that price action was back within the range we identified at the beginning of the week. Remember, we acknowledged this range between the $82.85 level and the $82.20 area. Now, we saw the same thing happen between the New York session and the early hours of today. As you see, price action came back into that zone. Now, with that being said here, another thing which I also observed here is the selling pressure around the $82.85 level. We saw what happened on Friday. Remember, we saw this happened. We saw this happen during the early hours of this week. We saw how it became difficult for buyers to push price to the upside during the later part of the New York session yesterday, and it was at this point I was thinking that for me to buy, I will need price action to break out of the $82.85 level, taking out all the sell positions along this zone to give me a confirmation to be part of an uptrend continuation. So with that regard, for the fact that I'm very profitable so far this week, so I could afford to test waters above the $82.85 level, risking some of the profits, leveraging on some of the profits I've made so far this week to capitalize on that move. And as you will see here, price action has been triggered, and by now I have price moving over 30 pips in profit at this point in time. And for those who added more position, taking advantage of that breakout, very well done to you for capitalizing on that move. So right now we are not getting too excited, as this breakout could still turn out to be a false breakout. So we need to be very, very careful, ensure our stop losses are in the right place, so that if price drops to the downside, we are not going to be taken out with a much loss on this one. So now with this situation here, we already have a breakout of the $82.85 level, further confirming the strength of the buyers at this particular point in time. Now, for those who have missed out on this opportunity, that is, if you are not part of this bullish momentum and even the one that just broke out of the $82.85 level, well, let's see if the market will present us with another opportunity to be part of the uptrend continuation. And if possible, if this is going to be a false breakout, of course, we want to see a potential downtrend situation here. So for those who had missed out on this opportunity, let's wait and see if the market will come back and retest the $82.85 level. And if this happens, the appearance of buy pressure around this area on our lower time frame will give us that privilege to be part of that uptrend continuation. So that is how we are going to be capitalizing on buying opportunities today on the US oil spot. Now, in as much as we're looking out for buying opportunity, remember, you know how we do it in this community. We always ensure that we keep our options open, be flexible as possible. So as a result of this, we also want to analyze and look at the potentials the sellers also have in this particular market. And if there's going to be any bearish expectation, we of course want to be on standby to capitalize on that one too. Now, looking at the structure here, I told you earlier that this area below the $82.85 level has been a very strong selling niche in this market in the last 4 days or so. And because of that scenario, if price drops below that level and continuous selling pressure begins below the $82.85 on our lower time frame, I am of the opinion that we might likely be seeing a sell-off, at least for the meantime. So to do a visual representation of what I'm talking about, if at any point in time price drops back below the $82.85 and we see a couple of retests of structure around this area, remember that below the $82.85 level is seller's territory based on this current structure and based on the memory of that level in this particular market. So if continued selling pressure persists below the $82.85, then we are likely going to be seeing price drop to the downside. Now, how far that will go is dependent on the levels we have on this chart, but we want to be very mindful that taking advantage of a bearish momentum below the $82.85 level will be considered to be a counter trend opportunity. So you need to be very careful. So as soon as price action moves significantly well in our favor, you want to be moving your stop losses accordingly to secure your position. And I'm of the opinion that if price drops to the downside, remember we had this descending trend line identified at the beginning of the week, which was initially supporting the selling momentum we took advantage of on Monday. And of course, we saw the breakout of the trend line here. So if price drops below the $82.85, we might likely see a situation where price will retrace into the structure, which could be as a result of profit-taking activities, where depending on how price action reacts to that descending trend line there will determine if we are going to be joining another wave of bullish momentum or getting ready to join a sell-off if price drops below that descending trend line. So this is how we are going to be managing our positions on the US All Spot for today. So I would implore that you mark out these levels on your chart. Very, very important, as you will be needing them as a reference point to guide your trading activities for today. So with a quick recap of what I said today, let me just do a summary. We're saying that anywhere above the $82.85 level is good to buy. And for those who missed out on that opportunity, let's see if the market will come back, retest the structure to incite another wave of bullish momentum. Then we can join that move. And for those who missed out, it's a good opportunity to join. And for those who are already in this trade, it's another opportunity to maximize the potential of that bullish move. Then I also talked about the potentials of sellers if price drops below the $82.85 level, and we see how buyers find it difficult to break back above the $82.85 level. Then we want to be part of this counter trend opportunity and see how far that move will go before another uptrend continuation happens. So that was simply what we talked about here. And if you have any questions whatsoever as regards to this explanation I just made, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset on our watch list. You can as well use that time to mark out these levels on your charts, as you will be needing them as a reference point when you're about to make your independent trading decisions. All right. So I see a couple of comments here. I see one from Murphy J. Good morning to you, Murphy J. It's been a while since I saw you. Trust you are doing well, and thank you for wishing us all best of luck today. Thank you very much. So I also saw your comment, UP Day. Good morning to you. Glad to have you around here. So, in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial asset on our watch list. So the next instrument on our watch list for today is the USTech100. And I can still remember vividly yesterday how we were anticipating a bearish momentum during our live session, remember? So I would like to run through what things are looking like since in the last 48, 60 hours or so in this particular market. So let's run through this quickly. So I'll just zoom things in a little bit so you can see things more clearly. Now remember, at the beginning of the week we had a range. Initially price action was caught within the 15,360 and the 15,285 before we saw an expansion yesterday, expanding into the 15,400 and the 15,285, which further emphasized the level of indecision at this point in the time. And one of the reasons why I think there was an indecision phase in this market is the anticipation of the high impact event coming in from the US economic docket much more later in the week. The consumer sentiment index, the producer price index, and of course the what's the third one again? I think, okay, the consumer price index. So as a result of the anticipation of this event, we can see how the market has been very, very uncertain as we see price juxtaposed between our key level at the 15,004 and the 15,285. Now, in the addition to the observation of that range, we were able to spot an ascending trend line after connecting the series of higher lows. As we saw the lowest point here, we saw another higher low here, and we said we are going to be using that trend line to guide our trading activity for the week. And one of the things we agreed here yesterday is that as long as price remains above the ascending trend line, we shall be looking out for patterns and structures that will support the idea of buying this asset, but only sell if we do have a breakdown of that ascending trend line. And look at what we have here. We didn't see the scenario yesterday, breakout retest to join. That never happened, of course, hereby negating the idea of even thinking of buying the USTech100, as instead we saw the breakdown of the ascending trend line as we saw price break further the 15,285, which happens to be the support line for the week. And in fact, we saw price move about, how many pips was that? So for those who took it right below the 15,285, you would have about 140 pips in profit before the bullish momentum began. And I do hope you moved your stop losses accordingly to lock in your profits. Like I've always emphasized this, that whenever price action moves significantly well in our favor, we want to be moving our stop losses to secure the position. And if you had done that, you would have been taken out with a modest size of profit or at a worst case scenario break even. So with that being said here, what is going to be our plans? What are we expecting in this particular market? Now, before we go into the details here, I would like us to scale up a little bit into the higher time frame, refresh our memories on what is really going on from that perspective, and relate the structure we find there with what we have on the 1 hour time frame to make a well-informed trading decision. Now, scaling up into the daily time frame, this is what we saw at the beginning of the week. Remember, we acknowledge the fact that price action has been very bullish. In fact, since the beginning of the year, we have been noticing higher highs and higher lows. And to further confirm that, we had an ascending trend line. In fact, we had a couple of ascending trend lines here. The first one was this one after connecting the series of higher lows, as you will see. Then we had a deviation from that ascending trend line in the month of May to give us another new ascending trend line, which is the one we are using to guide our trading activities in the last couple of weeks. Now, with the situation marked out, we zoomed in to see how the market is reacting to this current structure. So one of the first things we observed here was the fact that as soon as price action got into that zone between the 15,950 and the 15,800, we begin to see how buyers begin to struggle. as the momentum that brought price into that area appeared to be thinning out, as we saw continued selling pressure resume around this area, hereby transitioning into what we supposed to look like a reversal pattern in the form of a double top structure. So if I'm allowed to give a visual representation of that reversal pattern, this is what we saw here. We saw this move all the way into this area. Price dropped back into the 15,400 zone. The inability of price action to break the previous high was a sign that we might likely be seeing a reversal at any point in time. And when we notice a potential transition of price action into a reversal pattern, the next thing we normally do in this community is to identify the neckline of that reversal pattern. And if you look at what we have here, we had a neckline at the 15,400 level, which of course we said we are going to be using as our yardstick for trading activity for this week. So this was our key level, and you know how we use our key level in this community. As long as price remains below the key level, we want to look out for patterns and structures that will support the idea of selling. And the fact that price action has broken down the neckline for us at the beginning of the week was a sign that we might likely be seeing a bearish momentum for this week. And we said as long as price remains below that key level, we will continue to look out for signs that will support selling the USTech100. And one of the key levels we are aiming at as our TP target was the 14,900, which of course also shares a confluence with that ascending trend line we identified earlier, and in fact it dovetailed to a minimum of 450 pips to catch here if price culminates around that area. So at this point in time, you should be able to digest what I just explained right now and how important the information we have here on the daily time frame will be useful on the 1 hour time frame. So the fact that price still remains below the 15,400 still makes selling much more reasonable at this juncture in the market. Now, scaling down into the 1 hour time frame, we begin to see things very, very clearly. And with the ascending trend line we spotted yesterday, we had a bearish signal as we had price break down the ascending trend line. And we all know that from a technical standpoint, whenever price action breaks down a structure such as the ascending trend line like this, we expect at some point in time price is likely going to come back, retest the ascending trend line where the appearance of selling pressure will welcome a downtrend continuation. Now let us look at what has been going on here since the later part of the New York session yesterday till this morning. We see price climb up, taking us out of our sell position with a modest size of profit. But one interesting thing you would notice here is that price action came back into the ascending trend line that was broken yesterday and immediately tested the trend line. We begin to see sell pressure resume at least in the last 3 to 4 hours, giving us signs that we might be getting ready for the downtrend continuation. Then in addition to that is this level at the 15,360. Remember that was the highest point price was at the beginning of the week. Now price is back into that area, giving us signs that we are within the seller's territory at that point in time. So price remaining below the 15,360 is what we are going to be looking out to sell. So as long as price remain below the 15,360, we want to look out for patterns and structures that will support the idea of selling. So now that we have this marked out, so how do we capitalize on a potential bearish move? Now, if we look at the structure closely, let's bring out our line charts. You will see that we have an ascending trend line we can work with for today. So we have something like this. Let's see what have you. Okay, so let's bring back our candle chart and do some adjustment to capture the lows we have here, the pivot lows. So we have something like this. Now we have a situation where price is currently trading along this ascending trend line, as you will see. So I will need price to break down, retest the 15,325 to join a bearish move to the downside, then a further breakdown of the 15,285 will welcome more selling opportunities. And look at what we have here. The lowest point where price action has been for this week is around the 15,150 level, which of course we will be adding more position if price action breaks down of that structure. So let's mark these levels out. 15,150 level, as you will see here. So let's see how this will play out going forward. So a further breakdown will definitely welcome more selling opportunities in this particular market. So that is how we are going to be managing a sell position on this one. So anywhere below the 15,325 level seems most appropriate to join a bearish move. Now, don't forget that you must have your stop losses in place, of course, and then anywhere above the 15,360 seems most appropriate. So you can have a stop loss ranging between 45 to 55 pips depending on your portfolio size. Now, with the sell position well laid out right now, let's look at the potentials the buyers also have in this particular market. So what do we want to see here that will make us want to consider buying the USTech100? Well, at this point in time, I would rather want to see price action break out of that key level at the 15,400 to join a bullish move, which I doubt will happen at all based on the way things are looking like at this point in time. So, but if it does happen that we have a breakout and retest of the 15,400, then we can consider buying. But I doubt if it will happen. But if it happens, let's be on standby to capitalize on that move. So this is my view here on the USTech100 for today. If you have any questions, feel free to let me know in the comment section. So it's a very simple setup we have here. So let's endeavor to capitalize on that move as we continue to hold on to a bearish bias for this week. And I've said here that the only condition or criteria that will make us want to consider buying is for price action to break out of that key level situated at the 15,400. If you have any question, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial asset. So I see your comment here. 4398, good morning to you. Thank you for checking in. 6422, good morning to you too. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So I will be moving on to the next financial asset on our watch list. So the next asset on our watch list for today is the GBPUSD, and in fact I have a sell position running at this point in time. So let's run through what has really been going on in this market since the beginning of the week. Now, looking at the structure here, it is quite clear that price action has been very choppy, let me say. There is an uncertainty in this market, as you will notice that since last week Friday, price action has been caught within that range between the 1.279 and the 1.2700 area to emphasize the level of indecision in this market. And remember that on the economic calendar, we have high impact events coming in from both economies, that is the United Kingdom and the United States economies for this week. And let's run through the economic calendar one more time. So for Thursday, we have the Consumer Price Index from the US economic docket, and the Consumer Price Index is more like an inflationary measure impacting the purchasing power of consumers and influencing market expectations about central banks' policies and interest rates. Then on Friday, we have the gross domestic product annualized for quarter two, and that's from the United Kingdom's economy. And this is a very, very important event that is likely going to impact investor sentiment and influence trading decision. So the GDP data provides insight into the overall health of the United Kingdom's economy, and of course majority in the market will be looking forward to that event. Then on Friday, we have the producer price index, which measures changes in input prices for producers, impacting production cost, supply chain dynamics, and ultimately influencing consumer prices and inflation. Then we have the consumer sentiment index on Friday, which is published by the University of Michigan, and it gauges consumer confidence, which has a direct impact on consumer spending and of course economic growth, and which on the long run influences market sentiment and asset prices. Now, as a result of this event, it is quite clear that participants in this market, at least major key players in this market, are looking forward to this event, and as a result of that, they are stepping aside from the market, hereby giving us low liquidity, price cut within a range, people waiting for data to get clues into what price is likely going to be doing. So as a result of this, we are in a limbo right now. But one thing we also observed at the beginning of this week was that ascending trend line, which we said we were going to be using to guide our trading activity. Now remember, after we connected the series of higher lows here, we had this ascending trend line marked out on our chart. And one thing we agreed on Monday was that as long as price remains above the ascending trend line, we shall look out for patterns and structures that will support the idea of buying. And the only thing that will make us want to sell the GBPUSD is for price action to break down that ascending trend line. Now we had buy positions, remember, at the beginning of the week. We saw a double bottom structure here just right above the ascending trend line, and with our neckline situated at the 1.27435, we capitalize on the breakout of that structure to give us our first buy position for the week. And for us, we took advantage of that move. We saw price move about 47 pips before the bearish momentum began here. Now, yesterday during our live session, we acknowledged that the continued selling pressure around the 1.279 could influence a momentum shift in this market, as this could lead to the breakdown of that ascending trend line. And once we spot that, I told us yesterday that we are going to be selling below the 1.27435, which of course happened. I think during the early hours of yesterday, we saw price drop below the ascending trend line. Price moved about, how many pips was that? Moved about 67, 69 pips thereabout before this bullish momentum began. So it was, though these moves we took advantage of this week are really not that significant, as price did not move far before it snapped back into our entry point. So on both occasions, we really did not scoop anything significant at all. But thank goodness we were neither in a loss on both occasions. So now with the current situation now, based on this current market structure, what is going to be our plans for today, and how do we intend to capitalize on any potential trading opportunity? Well, while trying to decipher where price action is likely going to go this morning, I was able to notice that as soon as price action came back, remember this trend line was broken, and we all know that from a technical standpoint, when price action breaks down the ascending trend line, we expect that price at some point may come back to retest that structure to incite a downtrend continuation. And as a result of this expectation, I noticed that we had a couple of selling pressure as soon as price action got into that ascending trend line to test it. And with that in mind, I decided to join at the breakdown of the 1.27640. And for those who saw this beautiful opportunity, well done to you for being on standby to capitalize on that move, as you will currently be running with about 28 pips on that single move. And if you added one more at the breakdown of the 1.27435, you will have a total of, let's say, about above 30 pips in profit at this point in time. So well done to everyone who are taking advantage of these opportunities. And I do hope you had your stop loss in place. Very, very important. You want your stop loss to be right above the 1.27900 area. Now, one of the other things that made me consider selling was the fact that price action was back within the seller's territory. Remember how that zone has been a strong selling niche since last week Friday, as you will see here. So let's see how far this move is going to go. Will it come back into the key level again to continue the range prior to the event coming up tomorrow? Or are we going to have a situation where it breaks down this 1.27 to incite a further sell-off? So let's see how this will play out. Move all stop losses to your entry point. Secure those positions while we look out for more opportunity if price action breaks down, retest any of these levels that we identified here. So you want to be marking out those levels to be able to capitalize on the bearish move to the downside. So that is my view here on how we are going to be selling the GBPUSD for today. However, in as much as we're looking out for selling opportunities, remember we cannot ignore the potentials of buyers too as well. Last week we witnessed an interest rate hike from the Bank of England by another 25 basis point, bringing the interest rate range for the Bank of England to, I think, 5.5 or 5.75 right now, which is quite higher than the US dollar, which of course it should be an attractive windows for investors to capitalize on. But we are not seeing that traction yet because of the events we are looking forward to tomorrow. And because of this, we cannot ignore the potentials of buyers. And if we look at the structure here, what is it that you think we can see here that will make us feel comfortable buying? The only thing I want to see here that will make me buy the GBPUSD is for price action to take out the 1.279. Remember, this area is a very strong selling niche in the last 3-4 days now. So I would rather see price action break out of the 1.279 for me to start considering selling. That is, price would have taken out all the sell positions here, and if possible, give us some liquidity, which would reflect on the chart as retest by pressure above this area. Then we can join the uptrend continuation. So this is the only condition or criteria that will make me want to be buying the GBPUSD. So to buy the GBPUSD, we want to see price break out, retest the 1.27900 level. So if you have any questions or need further clarifications on what I just discussed here, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as usual to give some time to see if there are any questions before we move in to the last financial asset for today. And you can use that time to mark out those levels on your chart, as you will be needing them as reference points to guide your trading activities for today. All right, so I see your comment, Haki88. Good morning to you. I accept your flowers with all humility. How are you doing today? And glad to have you around. It's been a while since I saw you, Haki88. Trust you are doing very, very well. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the last asset on our watch list for today. So the last asset on my watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. Now on the gold spot, we have quite an interesting setup here. Though we price has been looking very bearish. As we can see, we have lower lows and lower highs in this particular market, and as a result of that, we had this couple of descending trend lines which we identified. I think on Monday we identified this, and we agreed that this trend line here will continue to guide our trading activities going forward. So as long as price remains below the descending trend line, we have no business buying that asset. Now let's quickly run through how the week started for us here. Remember, we bought at the beginning of the week despite the strong bearish momentum. So I think we saw something on the 15 minutes time frame which I shared with you at the beginning of the week. I would like us to run through that quickly before we go into the details of what we are going to be looking at for today. So the first thing we observed on the 15 minutes time frame, that was on Monday, was the fact that price was indeed bearish. Anyways, we saw this, we highlighted this trend line, and then we begin to notice that as soon as price got into that zone around the 1934 area, we begin to see buy pressure resume around that level. And one of the conditions we highlighted here that will make us want to trade was to see price break out of that descending trend line, retest of structure, then we can join a bullish move. And in fact, we were lucky enough to be part of that move as we saw price break out of the trend line, and in fact did a couple of retests of structure, very kind enough to give us the leverage to join that bullish move all the way to the upside, as you will see. And of course, we capitalize on that momentum by adding more positions. I think we had about 3 positions on that one before the bearish momentum began. And if you had moved your stop loss accordingly, like we have always been preaching in this community, you must have been taken out with a modest size of profit. Then since that moment, price action has been a little bit choppy, as we saw. Let me go back into the 1 hour time frame here. So we had this scenario. Hold on a second. Let me see what's going on here. All right, so this is where we are. So yesterday's trading session, we saw this scenario. Hold on a second. Let me zoom things in a little bit. So we had the scenario figured out. We had the descending trend line, and we said as long as price remains below the descending trend line, we shall feel comfortable selling and looking out for more selling opportunities. So this was where we were during the live session yesterday, just right above the 1930. Remember how important the 1930 is. We said that level is going to be our key level for the week, and you know how we use our key levels in this community. As long as price action remains below the key level, we want to be looking out for patterns and structures that will support the idea of selling, and not unless price breaks above the key level that we want to be looking out for patterns and structures that will support the idea of buying. Now, yesterday's trading session, we saw price break down the key level, and in fact we were part of that opportunity, as we all were all on standby to capitalize on that one, as price moved over 60 pips on both occasions in our favor before we were taken out again at both times. We saw it happen twice. I think we had the first one, we had the second one here. And one thing I noticed this morning while trying to dissect the current market structure was that as soon as price got into the 1,925 level, we begin to see how sellers have been struggling around that area. Now, with this situation here, it was quite clear that that area has a memory for buying power. So what I did here was to go to the back, to the past, and see what has gone on in that area before. I didn't go that far anyways. I went to Friday last week trading session where I saw the sharp rejection of that zone by the buyers. Now, since the last 24 hours now, we have continued to see continued buy pressure around this area, giving us clue into how strong the buyers are within this area. So at this point in time, you would agree with me, we are within a very, very crucial point where this level could serve as a platform that could drive an uptrend move. So we need to be very, very careful, as our center of focus for today is simply going to be between the 1,930 level and the 1,925 level, where depending on what happens here, depending on where price break out, in what direction it breaks out to, will determine what our next line of action will be. Now, with this scenario here, and considering the fact that price action has been bearish, finding lower highs since the beginning of the week, let's take a quick look at the potentials of the sellers before we talk about what to look out for to buy this asset. Now, to sell the XAUUSD today, I want to see price action take out all the buy positions within the 1,925 zone. I want to see something significant happen, something like a breakdown of the structure. Then I scale down to my lower time frame to see signs that buyers are finding it difficult to climb back above the 1,925, and of course this would reflect on the chart as a retest of structure. In fact, if a multiple retest happen, this will be a very good signal to join a downtrend continuation. So the condition that will make us sell the XAUUSD today is to see price action break down and retest that zone at the 1,925. So mark that level out on your chart. A breakdown retest of the 1,925 will welcome selling opportunities. Now let's quickly talk about the potential the buyers also have. Now at this point in time, despite the fact that we have been noticing lower highs in this market, you will notice that price has been finding it difficult to break through the 1,925, which is something that we cannot ignore at this particular juncture in the market. So if this continued buy pressure we've been observing here since last week Friday persists, then we might likely be seeing an accumulation zone that will build a bullish momentum during the second half of the week. Now, if we are going to consider buying the XAUUSD today, I would want to see price break out of both the descending trend line. Of course, if price breaks out of the descending trend line, this will be a sign that the trend line may no longer be able to negate the bullish attempt, and the breakout of that trend line interestingly shares a beautiful confluence with the 1,930 level, and that's our key level for the week, remember. And when price climbs above our key level, we want to be looking out for patterns and structures that will support the idea of buying. So a breakout and possibly retest of both the trend line and the 1,930 will be welcoming buying opportunities for us. And remember, we have very important key levels like the 1,938, as you will see here. We also have the 1,941 and of course the $1,946.50 level, where we shall be looking out for more opportunities to maximize the potential of that uptrend continuation. So that is how we are going to be managing our trades on the XAUUSD today. And in fact, if price still finds it difficult to break through the structure and it goes on to break out of the neckline of the 1930 and the descending trend line, then we will have had a reversal pattern in our books in the form of a double bottom structure. So let's see how the market will play out. Let's see how it will react with this level. So our center of focus for today is around the 1930 and of course the 1925 level, where depending on how price action breaks out of the structure will give us a signal of where price action is likely going to be going for the second half of the week. So these are my views here on the XAUUSD. Very simple setup. So you do want to be marking out this level so that you can use it as a reference point to guide your independent trading decision for today. So I think on this note, I would like to call it a day. But before I do, let's give about 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. I see your comment, Valeria. Good morning to you. Thank you for checking in on us. Glad to have you around. 88818, good morning to you. Glad to have you. M Davide, good morning to you too. I see your blushes. Aki 8A, thank you very much. And 848 says, I don't understand English. Well, the team is working on something that can subtitle what we discuss in here, but with time we shall get, I hope we get something positive in that regard. So the team is working on that one. Thank you for that feedback. All right, everyone. I think in the absence of no question, I want to assume that we are all on the same page here. So it has been a wonderful moment with you guys out here today, and I very confident that we are well equipped to take advantage of any potential trading opportunities today. So we were able to take on 4 financial assets, the XAUUSD, popularly known as the gold spot. We took on the GBPUSD. We took on the USTech100, popularly known as the Nasdaq, and of course we also took on the USOILSPOT 2 as well, using simple parameters such as trend lines, key levels, and chart patterns. We were able to strategically position ourselves ahead of the New York session today. So I wish every one of you best of luck today as we continue to monitor price action. And for those who are joining us for the first time, I hope you are able to gain 1 or 2 things from what we discussed here today. In fact, trust me, the more time you spend with us, the better you will become in getting to understand how things works here and eventually be able to use the information you have gathered here to make your own independent trading decision. So welcome once again, and I still look forward to see more of you. So on this note, I wish you all best of luck once again, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come back here to review how well these assets have been doing and at the same time get ready for tomorrow's trading session. Tomorrow promises to be an interesting one. Remember that we have high impact event coming in from both the United Kingdom and the United States, which of course is what everyone in the market has been anticipating, and the likelihood of huge volatile movement in price action is very, very possible tomorrow. So tomorrow holds a lot of promising scenarios for us. So let's be part of the session tomorrow and don't let's miss out on the ideas we shall be sharing here. So on this note, do have a wonderful evening, everyone. Bye-bye.